That is Alvin from Dr. Wealth. So, what a day! Trump reversed his tariff policies, or at least suspend for the next 90 days for about 75 countries. There will still be tariff, just a baseline 10% tax on them. It's not as high as what it used to be for the next 90 days. Okay. But however, there was one country, which is China. US main enemy wasn't given a tax break, and in fact the tariff went up to 125%, okay, because they are having this bickering. Each is layering more and more tariffs on each other, and China doesn't want to back down, right? So the US have said, if you don't retaliate, I will be nice to you. If you retaliate, I will not be nice to you. So that is the narrative that's going on right now. But this is what happened yesterday. Nasdaq was up 12%. S&P up almost 10%, and Russell 2000 up 9%, which is a small cap index. Okay, so it is still a very tech heavy driven kind of bull market, or at least bull for a day. We don't know whether this rally can sustain, and Dow is up about 8%. So these are very, very strong returns, and this is like biggest one day gain since 2008. Okay, so that was what the media has been reporting, and this is very exceptional, right? So that means that people who have held on would have recovered a significant part of their losses just in one day. Okay, and diving deeper, these are the top stocks in the US by market cap, and Apple regained its number one spot. It's after briefly losing to Microsoft, because Apple's share price dropped a lot more due to the tariff threat. A lot of the iPhones are made overseas, right? So Apple up 15%, Microsoft up 10%, Nvidia up 19%, and January you can see the Mac 7 did very well, right? And even Tesla was up 23%. So this was a very huge rally, and because again the index is still heavily dependent on these tech stocks, when this tech stock rally hard, you can see that the index also went up a lot. So as I said, it's a tech driven recovery on that single day itself. There's a bigger worry, right? So there was also rumor saying that this is probably the reason why Trump folded, okay? That he decided to suspend the tariffs, and that is happening in the US Treasury bond market. And we can see that by right, the stocks, when it was crashing down over the last 1 week, bond prices should be going up as investors flight to safety. They sell riskier stocks and go for safer bonds. But this was not the case. After briefly going up for a while, the bonds just tanked together with the stock market. So you can look at the longer tenure, which is more than 20 years, which is ticker TLT, is up down 4% over the past 5 days, right? The shorter duration bonds, shorter tenure see a lower decline, but at the end of the day, they were still dropping. So there could be a few reasons why this is happening, and this is a very serious matter, or it can be a very serious matter depending on the reason why this is happening. So there are three possible reasons that I thought of, right? So first is that there are rumors that China are dumping the US treasuries, as well as hedge funds are unwinding their trades. Both China and hedge fund might be selling over the last few days and cause the bond prices to fall. So if this is the case, it's not a big problem, because this is just a small temporary issue that once the selling is done, the bond prices will stabilize. Okay, so I'm not concerned about that. Number two is that it could be because of the tariffs, the inflation goes up, long-term inflation goes up because the goods are expected to be more expensive. Even if they're manufactured in US, it's going to cost more because labor, supply, everything costs more, right? So that could be driving a long-term inflation, and therefore the long-term rates have risen and the bond prices fall, right? So this is a harder problem than number one, because that would eventually lead to a stagflation, right? Because inflation remains sticky and stubborn while economic growth slows down, right? So you get a double whammy, and in this kind of scenario, it will last for years, and investors would have a tougher time as compared to if it's just a recession, right? Because there will be some sectors that will do better, but there will be many sectors that don't do as well. So it has to be a lot more selective. That makes investing a lot harder. There's more uncertainty, definitely. Then the most serious case is number three, okay? Number three, if it happens, and that is the long-term credit worthiness of the US. We know that US is heavily in debt, and if the sell down of these US Treasury bonds is really a market reflection of the fear that the credit worthiness is going down, or maybe potentially there could be a default, or whatever bad things happen, right? And US Treasuries are considered the biggest safe haven in the world. Uh, Investment grade, and if the credit rating keeps dropping because of this indebtedness, then there will be a very heavy repercussion to the rest of the structure of the global financial markets. Okay, where are you going to find the next safe haven that is going to hold so much assets, right? Because at this point in time, I don't think there's an alternative that's as big as the US Treasury. So entire risk management for global financial markets will have a very tremendous impact. They will need to decide how to allocate the money. I hope that is not what is going to happen, okay? Because if that's the case, we are really looking at a downfall of the United States. And that would eventually also have repercussion to the stock market and US companies as a whole. So the next thing, of course, more importantly, is the market viable, right? So let's look at the chart. This is for the S&P 500. We can see a big long bar at the rightmost hand of the chart, right? That was what happened yesterday after the tariff was paused. And we can see from the top to the low is about a 21% drop. So if you ask me, it is a good milestone, right? When the 20% mark has been breached, is considered a bear market. One doesn't need to buy in all, but could start buying in tranches, right? So at the 20% mark, at the 35% mark, or even at the 50% mark, okay? So of course the numbers doesn't matter, but I think within this range, 20 to 50%, start to do some buying is possible, right? As we can see, we don't know, right? The rebound can happen, and whether this is the bottom, we also won't know. It could be a case where the new developments happen, right? Trump can also unpause, right? If he can pause, he can unpause the tariffs, and then the market can go south again, right? So it is very difficult to guess where is it going. But I think taking advantage of the opportunity, if it's low enough, and there are some stocks that are looking at the valuation is reasonable, I think don't need to delay too long, right? And that doesn't mean that you should like go in everything, right? Going in tranches, I think is a reasonable kind of approach that one can consider. And there are some stats that you should know, right, which tend to paint a positive outlook, right, in terms of we don't look at whatever news out there to cloud our judgment. Let's look at statistics. This is one of them, right, when there is a biggest one-day gain, okay, like what we have seen yesterday, the S&P 500 will have almost have a perfect actually it's not almost, it has a perfect track record of delivering positive return in the next 1, 3, 5 years after these one day big gains. Okay, so it happens to be the third largest one day gain in history, right, since 2008, and market tends to do well after that, right? So this is one statistic standpoint, and the other statistics was based on VIX. Okay, so VIX hit 50 points a few days ago. So VIX is a fear gauge. If the fear gets too high, it means that the pessimism is too extreme, and usually market will snap back, right? So in the past few days, when it VIX hit 50, okay, then some people were already talking about this, that it tends to be bullish, right? So it happened that yesterday was a very big day up, and let's hope that it continues, okay? And the statistics hold true, right? So if that's the case, the next few years, S&P 500 will also be delivering good gains. Is the worst over? As I said, we won't know that. Right now it's 90 days pause, but what's going to happen after that? Is the negotiation going to be positive or negative? And is Trump going to have any other surprising moves, right? So this is something that we cannot predict in advance, right? Whether it's used as a negotiation or resolving that issue externally because of all the trade deficit as well as its high indebtedness, right? So they may see tariffs as a way to get out of the situation. We also won't know what is the real impetus or what is the strategy that Trump is doing to the rest of the world in order to get US make America great again. So with all this, right, I think it's very hard to say, right? So what you do is more important. Okay, buy in tranches, accept that you cannot know exactly what's going to happen next, accept that you may not be able to buy at the right bottom, accept that the stock can still go down after you buy them, right? So these are things that I think we can do within our sphere, right? worry about things that we can do, not worry about things that's out of our control, what Trump is going to do next. It doesn't help at all. But what are you going to do? Are you going to buy? Are you going to wait? Are you going to sell? That is, I think, the more important question. As for the other countries, of course, the highlight will be on China, right? Because the tariff is still very, very high on China imports to the US. And let's discuss some of the things that may happen. I do think that, yes, the negotiation with US will happen, right? I think even for China it's possible. Just that it's less likely given that they are trading very harsh words with each other. It becomes personal attack rather than just about the trade issues. Let's hope to see some positive development there, right? And the second thing is I'm more hopeful is that there will be new trade alliances. Like for example, China, Japan, Korea are already talking, right? So it is very likely that other countries will form their own alliances, form their own free trade agreement with or without the US. And that is good news, right? So that means trade will still flow uninhibitedly in a lot of other countries. Then the third is that domestically, a lot of countries will start to look at fiscal and monetary stimulus to prop up their economy, right? To reduce the damage from the tariffs that's applied on them. So that applies to Singapore as definitely as well as China, right? So this is China. So China national team has also intervened to buy stocks or buy ETFs in the market to support their stock market. So we saw again yesterday, despite the spike in tariffs against the Chinese, and they're also talking about accelerating stimulus to counter Trump's tariffs in advance. Okay. And this is at the time of recording, right? Asian markets are up as well, following the US strong returns. Nikkei is up about 8%. Even Hang Seng is up about 2%. Okay, even though that the tariffs went up 125%, I thought that today China stocks will go down, but apparently it didn't. It still was up at the time of recording. And Singapore was also up about 6% for STI, right? Bank stocks recovered strongly. DBS up almost 10%. So finally, really don't assume the worst, don't assume the best. I think the reality is usually somewhere in between, right? Don't need to be so pessimistic that you don't buy anything. Don't be too optimistic that you leverage up and do funny things and get yourself into trouble. So I think a more prudent way is to take some action, right? Buy in tranches, buy in different phases, be at peace with the outcome of whatever the market is doing. I think that is probably the best way, right? So hopefully you find some insights in this video and help you make a better decision. And remember to like this video, subscribe to the channel, and I'll see you in the next one. Goodbye.